Andy Maynard is Managing Director, Head of Equities at China Renaissance, joins us with his take on things. Andy, thank you very much for joining us. I wouldn't say it's a day of reckoning because we've had many such days in the past, but what do you expect from the Housing Ministry today, from Nihong today?
Well, I think, unfortunately, the market's starting to get ahead of itself, and I think you adequately described, the anticipation is so built up, as we've seen 3 or 4 times in the past. And I think what we're probably going to see today is probably going to disappoint the market. I hope I'm wrong, but it's probably going to be likely more about the implementation of previous measures all announced rather than anything new. And I think the market is really sort of confident in the fact that anything new is positive and anything that's previously announced in terms of implementation is negative. So I wouldn't be surprised if we're on for another really highly volatile and prosperous day today, to be honest with you.
Okay. What about relief for the property sector? What about clearing up the inventory, the pent-up inventory of unsold flats, and also the risk of delinquencies? So in terms of financing those bad loans or getting them off the bank balance sheets?
I mean, those points that you've mentioned, they're so wide, they're so large, they're such a massive task to fulfill. And I feel that the market in the last 2-3 weeks got so much ahead of itself that suddenly there was going to be some magic wand that was going to get waved. And all of these issues are going to be resolved. It's very clear that Beijing has ultimate resolve to fix this situation. But I think the market has got to anticipate that it's going to be a lot longer road for recovery than just a few press conferences and measures that are announced. I mean, the special bonds that are getting announced and the implementation of that in terms of the land supply, the unsold housing units are all great. But again, this isn't going to happen overnight. And I think it's good in a way that the market contracted and came back. I mean, we have to remember where we came from in the first place. I mean, for Hang Seng, for example, at 20,000, 20,500, we're still up 20% for the year, which, considering if you'd have said that 2 months ago, you would have been sort of feeling that you were in cloud cuckoo land. But, we've rallied, we've come back. I hope we hold. I hope the market is able to absorb the measures, to realize the resolution that Beijing has clearly got now, not only for the housing market, but for the overall economy. And we start to build a base going forward without the knee-jerk reactions of either positively or negatively following press announcements that coming out of different ministries across the Chinese, the mainland. It should be said, though, I mean, it's kind of unprecedented that we've had so many announcements, which clear to us that the resolve is so strong that I feel that the market just needs to be a little bit more patient and, from an investor's point of view, maintain their weightings in the China market, because I'm very, very confident that we will perform, but it's just going to be medium term as opposed to short term.